is management accounting. In management accounting, there will be the two papers. Number one will be, that is paper number one compulsory, which is containing, there are three topics in that. Three topics are there and there are 12 units are there. So all this the pattern of question paper will be. So there will be, just see, A, B, C, D and E. There will be 5 questions per group. Out of 5 questions, you have to attempt 4 examination, 4 questions. 4 questions, which carries 20 marks. Means each and every question there will be option for. Each and every question there is option for. Now the topic just will see that containing the syllabus. Just I will explain the syllabus of the management accounting paper 1 will be the meaning, that is first will be introduction to management accounting. Just listen here. I have to notes. Just listen here. Don't take it. I have to notes. I will provide notes for you. No problem. Because so I have drawn the notes as per the question papers. So for each and every topic, we can ask you five questions. Out of 5 questions, you have to attempt 4 to take questions. So there is a less practical here in management accounting. We can ask you 1 or 2 of them. First paper and second paper also same things. So in the paper number 1, the first topic containing introduction to management accounting. So this introduction to management accounting. First in that they ask you meaning and definition of management accounting. Another will be financial accounting, cost accounting and management accounting. So there is a short question in this connection. They can ask you distinguish between management accounting and financial accounting. Distinguish between management accounting and cost. 5. Each and every question contains 5 marks. Not more than that. Then third will be the tools and techniques and role of management accounting. So next topic number 2 will be analysis of financial statement. In that meaning, objective, tools and financial statement. Then after that, unit number 5 that belongs to you common size statement. So it is comes under the analysis of financial statement. Common size statement, rate analysis, ratio analysis, fund flow statement, cash flow statement. So these are the units contains in topic number 2. That is analysis of financial statement. And topic number 3 will be working capital management. In that, concept and definition of working capital. Another will be components of working capital. Then accounting, the accounts receivable and inventory management. So these are the 12 units which can contain in paper 1. In that paper 1, just I will explain the, just see here. There is a separate notes on topic number 1 and topic number 2. Okay. So in that topic number 1 means paper number 1, in that working capital management. Just see. Working capital management. Working capital management. In that working capital management, just let's see here. First, what is the meaning of working capital? So they will give you meaning of working capital, then concept of working capital, determinants of working capital, and they will give to you, that is sources of working capital, then types of working capital, then meaning of cash management. They can ask such types of questions in this connection. Then explain the strategic core aspect of the cash management. So these are all questions which is asked in explanation. So as per this question, just I will go on making the revision of this. First will be working capital management. What is the meaning of working capital management? Just see. Working capital means just listen here. Don't take anything there. I'll give you notes in there. If you write this note, you will get good marks. Good marks means maximum most mark will get here in this section. Because there will be 20 pages. In your paper, there will be 20 pages. In 20 pages, you have to write all 5 questions, 4 questions. With 16 questions, you have to write 16 of 5, 80. And there will be 20 marks assignment in there. They will give you assignment for 20 marks. So here, meaning of working capital. Just see here. Working capital means current assets, and in that current asset, cash, then bank balance, then work in progress, sundry debtors, then inventories, and other parts they are given to you, work in progress. So working capital means cash in hand, cash at bank, bills receivable, cash in hand, then cash at bank, stock we can consider inventories and work in progress, minus current liabilities. Then what is the current liability? Current liabilities means sundry creditors, bills payable, outstanding expenses and bank. So these are called the current liabilities. So working capital means current assets minus current liabilities, or excess of current assets or current liabilities called working capital. So in that, just I will tell to you the exact meaning and simple meaning of working capital is current assets minus current liability in working capital. Then which are current assets? Current assets are those assets which can be converted within a span of time to cash. It's called current assets. Then another will be what is current liabilities? Current liabilities are those liabilities which can be converted within a span of time into cash. So in that current assets, cash in hand, cash at bank, bills receivable, sundry debtors, work in progress, and inventories. So these are the parts that can be considered in current assets. And the current liabilities will be which can be converted within a span of time into cash. That is sundry creditors, bills payable, outstanding expenses, bank overdraft. So these are the current liabilities. So for this here in this connection, just we see. So each and every organization, each and every enterprise, each and every concerns, working capital is very important. So why they can require working capital? So working capital can be used for two purposes. For the two purposes, working capital can be made in this connection. Number one will be for establishing business, means to making the expansion of the business, working capital is required. And another part of that requirement of working capital is so to mitigation of day-to-day expenses, working capital is required. So to mitigation of day-to-day expenses, working capital is required. Means if you want to expand the business, if you want to go on making the progressive or prosperity in the business, working capital is required. And another part will be so working capital is required to mitigation day-to-day expenses. So day-to-day expenses means, say for example, suppose you want to make the production at that time we want purchase of raw materials, correct? So purchase of raw material is required. So the factors of production, four factors of production. It is land, labor, capital, and organization. Without this, we cannot go on making any manufacturing thing, or we cannot manufacture anything or production like this. So for this, these are the two requirements, two purposes taken on making working capital: to expansion of the business or to making prosperity in the business, and another will be to mitigation the day-to-day requirement of the business, to making payment. That is called working capital. So working capital is required by the enhancing day-to-day activities. It's called working capital, and working capital is required for smooth conduct of the business. It's required for smooth conduct of the business. So for that, each and every organization go on making the arrangement of working capital. So that's why it is called as a lifeblood of an organization. Like this, blood plays vital roles in the body. Like that, in business, working capital plays a vital role, important roles, and that's why it can be considered as a lifeblood of an organization. So, control of working capital and forecasting of working capital is a continuous process. So, it is a continuous process. Means regularly we require working capital. Monthly we require the capital. Say for example, suppose you purchase a raw material and it can be purchased on the credit purchase. They will give you the credit for 1 month or 2 months. After 2 months, you have to make the payment for that. Correct? So it is a very necessary thing or essential things. Therefore, the control of working capital and forecasting of working capital is a continuous process. Continuously, you can do on making these things here. Therefore, part and parcel of overall management of the business is working capital. It can be considered the important part of the organization. Then we'll see some definition. We can ask you, what is the meaning of working capital and working capital? So there is one particular that is working capital management topic is there. In that topic, they can ask you three, four questions, five questions they can ask. Out of five questions, you have to attempt one in the examination. Now we'll see what is the definition of this. So here, Shubin, Dr. Shubin has defined the working capital. Working capital is the amount of funds necessary to cover the cost of operating the enterprises. Simple definition. In book, there are many more definitions given, but this is the simple definition which is given to you. Capital is the amount of funds necessary to cover the cost of operating the enterprise. Then another definition is given by the Gestelberg. Two definitions you have for this Gestelberg definition. Working capital or circulating capital means current assets of a company that changing in the ordinary course of business from another. For example, there goes to you from cash to investor to receivable and to receivable to cash. So for this, this is the definition which is given by the Gestelberg. So working capital or circulating capital means current assets of a company that changes in the ordinary course of a business from one arm to the another. They are given like this. Then the concept of working capital. See, another concept that can be built in the working capital. First will be following are the two concepts of working capital. First will be gross working capital and another is net working capital. What is the meaning of gross working capital and what is the meaning of net working capital? See. So they can ask you for 4 marks, 5 marks. That is, explain the working capital, give the definition, and explain the concept of working capital. There are two concepts. Concept number one is gross working capital, and another is net working capital. What is the meaning of gross working capital? First, we'll see. So, in this form, working capital refers needed for the currencies. So here, this gross capital, it is needed for the current assets only. And you know which are the current assets? Current assets will cash in and cash in bank, bills receivable, sundry debtors, work in progress, and inventories. So these are the current and prepaid expenses sometimes can be included. So these are the current assets. So that all the part of current assets mean gross working capital, it is yours to you. So here, this asset can be converted into cash within a short period. Assets are coming. And that current assets can be converted within a span of time into cash. Say, for example, within 1 year, it can be converted, or it can be immediately converted. That is called the gross working capital. Another will be net working capital. So here, it is associated with excess of current assets with current liabilities. It means current assets, working capital with current assets minus current liability, and that is called the net. That is net working capital. Current assets minus current liability is net working capital. So these are the two concepts that can be considered in this manner. Now we'll see what are the determinants of working capital. So many more time this question they can ask you. Determinants of working capital. If you see this question paper, only one question is previously I got it here. So just see the one. State the types of working capital. So this is another part we'll see later on. But they asked you state the types of working capital which is yours to us. Then another part that we'll be going to deal with here in this connection that we see in this bank. So all this question we have to cover within a prescribed period. Means there is a maximum 5 to 6 period will be there. So in that 5 to 6 period, we have to cover all these things. And you can remember one thing here. All questions that is coming in the examination in the book should be. So unit wise, they can cover the question, five questions out of five, out of that one. Very simple things. But this notes has been drawn by referring this book, but I'll make it simple. This solution. If you refer, if you read 2 3 times, easily you can write the paper and score. So, so general regarding about me, I served near about 38 years service. Hmm. Then there is a record for me. So every year my student get 100 in accountancy. So in this year also, this 29 years scored 100 on. So for MCOM also, one of my students got gold medal in sound. So for 12 standards, she stood second in the district, and BCom she stood first year, and for MCOM she got gold medal. And in 12 standards she got 90 marks. So on that time there were 3 students who scored 100 or 100. So every year's record is there. And for financial accounting for BCom also, 3 students scored in finance 99 marks. And I have done 1 mark less for them. Otherwise, they will score 100 on it. Because in paper, they score 75 or 75. So here also in advanced accounting also, in management also, some students has got 92 marks. So it is a solid subject. And they are getting now easy manners diagnostic. Right? So try to follow these notes. If you follow and write this note, you will get good marks here. Now we'll see. That is determination of working capital or determinants, I can say here, or it is called factors influencing working capital or factor that affects the working capital. This is also for 5 marks question. Now, nature in that, what are the factors? The following are the factors that determines that can be considered that can affect the working capital. First and foremost will be nature of business. Means how much capital is required, that is working capital is required. It depends upon the nature of business. The first and foremost point will be that is the nature of business. The working capital is required of a firm basically depends upon the nature of business. Which types of nature, which types of business are doing, it depends and the requirement of working capital according to that business. For example, they are given for electricity, water supply, railway needs very limited working capital. Why? They are not going any production. Suggesting railways, electricities, and water supplies, then public utility undertaking. So they does not require they are not required more capital. Why? So for electricity bill, time to time they are collecting the bills. Water supply bill will be collected, correct? And for railways, every day they can sell the ticket and collect the money. Means they does not require working capital. So what is the requirement of working capital? To making the day-to-day payments, to mitigation the expenses day-to-day working capital is required. But what's the steps of public utilities which are doing the services for the public or on the welfare of the public? It does not require more amount of working capital. Depends upon the nature. Then another thing that you must do. If you are doing the business for production, correct? If you are doing the business of production, product making business, it requires more amount of working capital. Like for making production, you have to purchases is made, then you have to pay the wages, then you have to labor charges you have to pay, then expenses, other expenses, own expenses you have to pay, and for that purpose for production making, it requires more amount of working capital. That's why the being as a what you can say the manager in the management accounting, so we can go on making the full cost of working capital. So how much working capital depends, and it depends on the production. Say for example, if you are making the production on particular year, say for 1 lakh units, then what is the probable 1 lakh units? How much capital working capital is required? Suppose your forecast is there instead of 1 lakh, if you want to make the production increase, say for 1 lakh 25, then what will be the working capital required for the product of 1 lakh 25,000? So all this It depends in nature. So it depends upon the nature. For this small business, small working capital is required. For the big business organization, more amount of working capital is required. And for the public utilities like electricity, water supply, railways, it needs the less amount of working capital as we see here in this connection. Now just see here this. Now you see the another point. The factors which can determine and determine the factors of working capital is size of business operations. Second point there. So here L1 point is given and this is asked for 5 marks. So try to maximize the minimum points. At least it requires 6 points. But they given in your book 11 points are. And all the 11 points are took here and minimize the summation. So first will be size of business. Working capital is required of a corporate can be directly associated with the size of business. In general sense, large size of business requires more amount of working capital, and for small size of business, it requires less amount of working capital. Size of business operation. So first point we see nature. It depends upon the nature. Now size. Big or business organization requires more amount of capital. Small organizations, small enterprises, small concern require less amount of working capital. Another will be credit policy. Credit policy means if goods purchased on credit worthiness, if you goods purchase goods on credit. Say for example, wages we can pay after completion of 1 month, or salary paid after completion of 1 month. Correct? Sometimes, so say for example, the salary for the month of January we pay in the month of February. Correct? February salary in the month of March like that. Only exceptional case is that bank so all the banking people who are servicing the bank, they enjoy the salary at the end of every month. Means last date of the every month. But other things they will give like this. Suppose you purchase goods on credit, say for example 2 months. Correct? After 2 months you have to pay these things. Therefore, credit policy depends upon the credit policy. So say for example, the credit policy of a company depends on the dealings with the debtors and creditors influence considerably and define the working capital. A concern which purchases is required on credit basis and sells its products and services on cash basis requires less amount of capital. If your purchases is made on credit, but immediately you can disposing it made on cash basis, it does not require more amount of capital. Correct? Suppose your purchases is made for 2 months credit, and if you sell the so-called making production immediately cash basis, it does not require more capital because cash is available immediately. Then you can pay the credit. If you are doing both things, if you are using the policy of credit purchases and credit sales, at the time it requires more amount of working capital. See, if you purchase for 2 months credit, you have to pay 2 months. And if you sold your product for 2 months, so your money for 2 months less. Correct? Means it depends on the credit policy that is debtors as well as the creditors. So that's why on the hand they given the concern buying its requirement for cash and allowing credit to its customer shall need the larger amount of working capital. Now here's business cycles now. Business cycles in the period of boom. Boom means in the period of expansion. If your business is goes in a prosperity ways, then how much capital working capital is required? In the period of boom, when the business is prosperous, there is a need for large amount of working capital due to increasing sales. Right? Your business is going in a prosperity way. Your business is increasing. Your business is expanding. At the time, you are requiring large amount of capital in the period of boom. Boom means expansion, prosperity. It requires large amount of capital. And in other hand, in the times of depression, we need a large amount of working capital. In the period of depression also, because you are going to go on making production, but that is not disposed. Depression is there, turnover is not there, turnover is not more, sales is not more. So at that time, your working capital it requires large because your so-called capital block, it will be capital into block, and to that extent, it requires the large amount of capital here. Therefore, business cycles that can affect the working capital. Then next determinants for that will be production policy. So in some cases, demand is subject to wide fluctuation due to seasonal variation and requirements of working capital. Cases depends upon the production policy, the policy to keep the production steady and inventory it requires the more amount of working capital. So production policy. If you're working production and you can stock your inventories or stock the equality means dumping the stock, correct? Just one making production and just you can keeping that stock without selling. So at that time it requires more amount of capital. So they want the production policy. How production policy is made? Just go on making manufacturing, just go on making production is going on, and just to go on keeping all the stock in a what you can say is warehouse and that warehouse it requires the more amount of capital. Then seasonal variations. Seasonal variation means there are certain products which can be one making in particular season only. Say for rice, wheat, and all these things. That will be one making production of particular season, rainy season. But you can go on making the consumption throughout years. Correct? Consumption, rice, consumed every day. Wheat, chapati, we can consume every day. But this production can be made for particular season only. Correct? So say for umbrella. Umbrella is not reaching, only rainy season we can. Then all winter season we can woolen clothes, correct? So these are called seasonal in nature. Right? Seasonal in nature. So for that, there are industries whose raw material is not available throughout the year. The factory throughout the years, raw material is required. But there are some raw material which is not getting continuously. Therefore, for purchase of that raw material and making compute and making utilization for production, it requires large amount of capital there. So for the seasonal thing, that can be process of running the entire year, which gives rise in more working capital requirements. So if you do and provide the raw material continuously, and for that, by purchasing the raw material, it requires more amount of working capital. Then dividend policy. See here, the dividend policy of a concern is also influence the requirement of working capital. So it depends upon the requirement. A firm that maintains a steady high rate and cash dividend irrespective of its generation of profits needs more amount of working capital than the firm that retains a large part of its profit and does not pay so high rate of cash dividend. So just see there, sometimes they can go on making high rate of dividend. Dividend means on sales we can pay the dividend. Correct? So while paying the dividend, it is a part and parcel of this thing. Suppose if you want to pay the higher amount of dividend, it requires more working capital. Correct? And if you pay the little less amount of working capital, it requires less amount of working capital. Suppose we have to purchase the shares, correct? So purchase the shares, there are so many big business organization in India, like India, Tata, then Reliance, so big business organization. We purchase the shares, right? For that shares, we enjoy more amount of benefit. At the end, they can declare the dividend by means of shareholder, correct? So part and profit, part and parcel of that profit they give us by means of dividend. Because if you purchase the shares, unless and until company go liquidation, money cannot be back. But we can sell the shares. Shares can be, it is a sales can be sold 1%, 2%, 3%, so many percent sales can be, right? You can sell it. Suppose while doing this business, you want to pay the more amount of capital, it requires more amount of working capital and less to pay the dividend less, little less amount of dividend. Because you see there are so many societies are there. There are so many credit sanस्थाs. So they give the loan, granting the loans. On that loan they charge 50% interest, 60% interest, correct? But while collecting, they just give the 6.5% interest. All for sanstha. The nationalized bank now declare for 1 year 5.5 interest, correct? And the difference between this is the profit for person. So that's why depends upon. So mostly some society can declare 15% income, correct? Suppose 15% dividend and the society has got a more profit at that time. Some part of that profit is also they will declare by means of some kind, some goods, right? Some kinds they will give, some gifts will be given. So like that here, depends upon the dividend policy. If you want to pay the more amount of dividend, requirement of working capital is more, and less amount of dividend is less amount of working capital required. The rate of growth of business. So the growth rate of a business is more than it requires more working capital. Growth is more means your that is company is going in a prosperity ways, continuously progressive ways, making more amount of production. It requires more amount of working capital. Working capital means it is the amount which required for mitigation and pay expenses. Correct? For example, suppose you construct, say, for example, factory for 200 crores. Just construction of a factory of 200 crores, which is a business thing. So in that factory of work, it requires material, require labor, require road is required, and to mitigation of these things, it requires working capital. Correct? Case in this case. Then other factors which affect the working capital are certain other factors such as operating efficiency management, ability, irregular supply, import policy, asset structure, and importance of labor and banking facility, etc. are the requirement of working capital. Depends upon the things what you are doing. So we are paying regularly labor charges or labor expenses, then regular supply making, regular supply making, whether you are taking loan facility from banking. So as per all these norms, these are the factors which can affect the working capital. Then credit policy of RBI. So RBI means Reserve Bank of India because each and every country has a main bank, correct? So like that, Reserve Bank of India is the central bank of India. It is a banker's bank, it's called. And they can go on controlling all the banks. They can give the guidelines to other banks, and it is the main bank. It is the main bank, correct? So like that, RBI has given some guidelines for this. So just the credit policy of RBI, Reserve Bank of India. Credit policy of RBI is another important factor which influences the requirement of working capital, and the RBI follows the selective and restrictive credit control policy. Selective and restrictive credit control policy can be used by the RBI. So as for this thing, so these are the 11 factors which can influence, affect, and determinants or factors which can be affected. Now we will see another bit. This they can ask for the three times. That is sources of working capital. Like that small question according to the question source. Right. So next we'll see what are the sources of working capital. There are three types of working capital requirement. There are three sources. First will be the long-term financing requirement. Long-term. Next will be short-term financing requirement and spontaneous financial working capital requirement. So for long-term, short-term, and spontaneous mean immediately, spontaneous, spot things. So for this we'll see sources of working capital. So by means of this, just if you show this chart, which is shown in your book. So the notes of life book by this of book. This is picture like this. So sources they made three parts. One part of box one. So in that long-term financing, which are the long-term financing? So long-term financing means if you borrow a loan from the financial institutions, then in that first will be issue of shares, issue of debentures, and deposit from the public and shares from internal sources. So these are the long-term sources. Long-term sources. Then what are the short-term financing? That is called short-term financing. In short-term financing, loans from banks, and loans from the there is a paper from commercial bank. That is they advance to you. Term credit loans from bank, commercial papers, factoring bills, and discounting of bill. Commercial proper paper means they can use some papers by giving some documents, important bills. Discounting the bills means just support. They suppose one particular person has got the bill of the another party. Say for 1 lakh rupees bill is there, correct? He draws the another and he writing after 5 months pay to me all my order the sum of 1 lakh rupees. Like it is a given conditions. Suppose suppose if that persons or if that company needs, suppose the company given the another things for this period like this. But at that time, the company needs the urgent amount of the bill, urgent amount of money. Then what they can do? The bill can be discounted in bank. Bill can be discounted in bank. What is the meaning of discounting a bill? Discounting a bill means collection of money from banks before its due date is called discounting. What is discounting? Suppose, for example, I draw a bill on you for a period of 5 months. I sold goods on credit for the next. I ask him, please pay after 5 months, correct? Then it is your duty to pay my money after 5 months, completion of 5 months. So you can take that goods doing the business, right? And after completion you can pay money. Then it is another bill. Okay. But suppose I draw a bill given to you, given the acceptance, you have given the signature, and over to me. Okay. But after 2 days, I need money. I want money. Then what I can do? I cannot meet you. So what is your name, please? Name? Huh? Vina. So Vina, I draw a bill to you. Please, Vina, pay my money. If you go after 2 days, then you will say no. So I will pay after 5 months. Come after 5 months. Then I will see whether they are not to pay. Correct? Just I will see that. Because you have given the agreement, I given the acceptance to you, I will after they pay to me like that. Come after 5 months. But I need this money. Then I cannot wait to you. Because you will be paying my money after 5 months. Then what I can do? The same bill which is handed over to me by giving acceptance and putting the signature, it is I will take that bill, go to the bank and ask. So I have got this money. Then bank will pay the money, but they will not pay 1 lakh rupees. Why? Because they are paying 5 months before, 5 months before, and for that 5 months they can charge the interest. But in the terminology of that bill of exchange, it is considered discount. They will give to 95,000. Why? They are making payment before 5 months. So that is called discounting. Discounting and collection of money from bank before its due date. So this is called short term. It's for the temporary purpose. If you need the money like that. Then another will be spontaneous financing. Spontaneous means immediate, spot, immediate, like this. They give to you spontaneous financing, where creditors, outstanding expenses. So these are some outstanding expenses you need to pay. So this is called the spontaneous thing. So these are the things we can consider. Actually, commercial banks play an important role. This commercial banks, correct? So all this doing the commercial business, doing the business of trade, accepting money, accepting deposit, signing loans, giving all services, all that balance of commercial. So RBI is not a commercial bank. It is a bank of India. It's a central bank. It is a banker's bank. Right? So for this, actually the commercial bank plays important role in providing the working capital to the business houses in view of mounting inflation. And the RBI has taken up certain fiscal policy and measure to check the money supply in the economy and coming from the sources. In that source, they want long-term financing. In long-term financing, following are the sources which can be tapped by the financial manager. Number one, loans from the financial institution. This is long-term. Another is floating. That is a floating of debentures. Means debenture, right? It's of debenture. And third will be accepting deposit from the public. Accept the deposit. Then issue of additional equity shares. If you issue the additional equity shares to raising the funds, raising the money. So like that. Then the raising funds for the internal financing. Sometimes you raise the fund for the internal finance. Internally, you can make payments for the things. It is a long-term financing, and they are given the fiscal policy, which is guideline by the RBI, Reserve Bank of India. The next will be short-term finance. What is the short-term finance? Just that explain here. These are the sources include short-term bank loans, commercial papers, cash credit, overdraft, and business completed. So these are the short-term financing. Now you see what is the spontaneous financing. Spontaneous financing. The major source of such financing are trade credit, trade creditors, then outstanding expenses. Trade creditors are some, there are some expenses which is remained paid, unpaid, not paid. So for outstanding things, so it is called the spontaneous finance. Suppose 1 month salary is not paid, immediately I come ask me, means spontaneously you have to pay parent, pay your money, pay your salary because it is unpaid. So immediately you can one make. All this it is it requires the spontaneous finance. But it so for outstanding expenses basically can be unpaid bills or that can be used as escalation. Now you see what are the types of working capital. Types of working capital. Now you see working capital can be classified on the following basis. Number one is permanent working capital. So first number diagnosed you permanent working capital, temporary working capital, gross working capital, net working capital, negative working capital. So these are the 5 parts which is asked for. So many times this is asked for this thing. Now we'll see one by one. What is the meaning of permanent working capital? First, types of working capital. One will be permanent working capital. So here it means minimum amount of investment in current assets which regards at all the times of carrying the minimum level of business activities. Operating cycle is a continuous process. You know, in business there are operating cycles, and it is a continuous business. And for starting that continuous business, it requires the permanent working capital. Permanent working capital is required. So, in that permanent working capital, that is called current assets, minimum current assets. The minimum level of current assets required at all the time by the business is called as permanent working capital or fixed working capital. And for that, some committees, your Tandon committee is there, and Tandon committee has named it. It is for that permanent working capital. Tandon committee has given a name that is called core current asset. It is called COR, core current asset. Tandon committee has given the name for the permanent working capital is core, that one core current assets. Then next will be temporary working capital. So this is also called as a fluctuating or variable working capital. It is called temporary. It depends upon the variations. Variation in the sense your production will be varies. Correct? Sometime increase, sometime decrease. Variation, fluctuating. Increase more less. So for that it requires the temporary working capital. This is also called as fluctuating or variable working capital. The amount of temporary working capital keeps the changing and depending upon the change in the production and sales. So it will depend upon the changes in the production. If your production is increasing, so it requires more amount of working capital. Production decreasing, so sales turnover is more. So for that it requires the working capital. Temporary. So this is known as the working capital. It depends upon the change in the production and sales. The extra working capital is required to support the change in production. Sometimes increase means increase more, and to doing that activities it requires more amount of extra capital is required to maintaining and making the adjustment of the what we can say here activities of the business and require more amount of working capital. The additional working capital represent the variable or temporary working capital, the size of which depends upon the level of production and sales resulting from changes in the market conditions. It depends upon the market conditions. Right? Sometimes one particular product is demanded more. Sometimes one particular product is not demanded more. So you know the law of demand. The prices are high, right? Demand is less. The prices are less, demand is more. So it depends upon the market conditions. What is the condition in the market? How that product is selling in the market? What is the demand of the product in the market? It depends on these things. that's why a temporary working capital is required. The gross working capital here. So it is the amount of fund invested in the various components, that is currencies. So it is the amount which is invested in the various common components. Say for example, only currency, gross working capital in currency. And you know currency, cash in hand, cash at bank, solidators, bills receivable, work in progress and inventories, and prepaid expenses. So this is called the totally that gives to you gross working capital. Then net working capital. So it is the difference between current assets and current liabilities. This is called the net working capital. These are the another types that is first. The concept of net working capital enables the firm to determine the exact amount available and its disposal for the operational requirement. So it is called net working capital means it is the excess of current assets for current liability and the current assets minus current liability. These things. Then negative working capital. So in business, sometimes your working capital will be maybe negative or maybe positive. Whenever working capital is negative, just when current liabilities are more than current assets, then we'll get negative working capital. Right? Current assets are less and working that is current liabilities are more, will got the negative working capital. Right? So such cases does not appear, or it is not useful for the business negative working capital. And what is positive working capital? When current assets are more, current liabilities are less, it is a positive. So therefore, that working capital may be positive or negative. It is one of the types. Then these are the five parts closely. Okay. And now another thing they are given to you. The all this just means discuss the functions of management. What is meant by management accounting? Explain the features. The first question, first part. I'll explain this. Okay. Then explain the objectives of cost accounting. Explain the functions of management. Explain the advantages of management accounting. What is meant by financial analysis. Explain the types of shows, but the right notes on trend analysis. And like this, fund close ratio, cash close ratio, and state the working capital here. And there are some asked ratio. Ratio is nothing but it's mathematical numbers. Mathematical number one mentioning, and the ratios are three types. First will be balance sheet ratios, then income statement, that is income ratios, and that is combined ratios are there. So for that, they are given to you, and definitely they can ask for 5 marks question. One problem is asked here. From the following information, calculate current ratio, liquid ratio. These are the ratios we can ask. How to calculate current ratios? I know just now told you. Current assets divided by current liability is current. Current assets divided by current liability is current ratio. It is always 2:1. It must be standard ratio with 2:1. Means to feasible things is and correct accuracy is there. So if you go and ask for the loan at that time, bank will check your ratio. That ratio can be considered the current ratio, current assets on current liabilities, and the standard ratio will be 2:1. Right? They can ascertain the satisfactory ratio. Whether it is satisfactory, then the bank can definitely grant you allowed the interest. Okay. Now let's see another thing is the liquid ratio. What is liquid ratio? Liquid ratio means current assets minus stock minus prepaid. That's what liquid asset. And liquid liabilities are there. Current liabilities minus bank overdraft. This is the liquid liabilities. Then liquid assets divided by liquid liability is equal to liquid ratio. Liquid ratio. It is also called test ratio. Liquidity ratio. Got it? Then it is always 1:1. Standard ratio is 1:1. This is the case connection. These are the current assets 1 lakh, current liabilities 50,000, liquid assets 40,000, liquid liabilities 40,000. Then fixed asset is what we got it, right? So and this way we can find out the ratios. I will give this ratio later on. Then they advance to you prepare the pro forma of changes in working for pro forma as per 5 marks that goes so that you see it comes in the basis of analysis state. Okay, that case will be considered. All questions are here, and there are some deficiencies in image, so that deficiency will be. I will give that. Now we'll see one by one here. Now we'll see here in this case will be. Now just see this is asked. Here also. Explain the scope of management. Just here. And features of management. Ask the question here. So if you see the topic wise, on that topic wise, they can ask 5 questions. Features, advantages, limitation, like that. So all point of cover there. They will not ask anything other than material supply. Only so far material is there. Very important. They can answer the questions. Now we'll see one by one. The first thing we'll see discuss 5 points of scope of management accounting. It is asked for 17, 15, and here also. Here also. This question. Current year's question paper is not there, just to see. Like otherwise, if you got the open university, other means your idea is like you are in service. Varada High School teacher. Indian college. Government. मी पुस्तक लिहिलेलं होतं. आणि चढवणार. इंजिनियर कॉलेज असेल तर मी पुस्तक लिहिलं आहे. पेपर बॅग. हा चांगलं छान पुस्तक लिहिलं. मागे पण दिलं होतं वराडा हायस्कूलला दिलं होतं मागे पण दिलं होतं पुस्तक. बारावीचं. As per the syllabus, the containing in that will be first all objectives, all pro formas, and all unsolved problems, and 10 problem solved problem 10. Solve the question paper set. 8 times question papers. After paper paper set होते. After paper so that according to that paper set, I will practice paper with solution. Here about 380. I think like today.
अकरावीला 12 आहे आणि 12वीला 14.
12वी 14 आहे.
12वीला 14.
तुम्हाला 15 पुस्तकं देते. तुम्हाला घ्या आणि ते मुलाला द्या. प्रॉब्लेम डिक्टेट करायचे डायरेक्ट सोडवायचे. म्हणजे इट विल सेव्ह युअर टाइम. मग देतो. इंडियन कॉलेजला इंजिनिअरिंग कॉलेज रिटायर इंजिनिअरिंग कॉलेज सिनियरला आपण शिकवलं होतं. एमबीएला काय
तिकडचे मुख्य कोणते असतील
कोणते काय ना
पाटील सर दादाजी कृष्ण पाटील
पहिला होते ते मागे पण पाटील झालेले 2014 ला पण पाटील ज्यावेळेला सिलेबस चेंज होतो त्यावेळेला का आयवरती काय पण सगळं मास्टर केलं संपूर्ण ऑल महाराष्ट्राचं जे ट्रेनिंग आहे ते ट्रेनिंग पण घेतलेलं आहे. माझ्याकडे ते पीपीटी 130 पीपीटी आहे प्रेझेंटेशन करण्यासाठी काही ट्रेनिंग वापरतो. ऑल ओव्हर महाराष्ट्राचे सगळे प्रोफेसर जे आहेत त्यांचं ट्रेनिंग नंतर मग सिंधुदुर्ग त्याच्यानंतर रत्नागिरी सर प्रत्येक ठिकाणी असतं लक्षात आलं पेपर पुस्तकं देतो स्पॉन्सर 150 रुपये किंवा 10 किलो मला देतो पहिला करून इफ यू रेफर दॅट डेफिनेटली विल गेट 100 अराउंड दरवर्षी असतात. इथे बाहेर क्लासेस घेतो दरवर्षी 100 असतात. आता यावर्षी चेक करतो दरवर्षी पेपर
एकदम इथे
दुसरी
एमकॉमचे
एसपी केले मी देते एवढाच नाही तुम्हाला बी प्लस पाहिजे, बी प्लस एवढं आहे फर्दर बी प्लस 20 मार्क असाइनमेंट असाइनमेंट देतात लिहून द्यायचं त्याच्यावर मार्क ऐंशी पैकी ते 50% वर मार्क इंजिनिअरिंग कॉलेजला 50% वर मार्क चांगले मार्क नाही सी पुढच्या रविवारी मात्र मला फोन आणि फोन करा पुस्तक आणावं बऱ्याच कॉलेजमध्ये शिकवायला see discuss the 5 points of scope of management accounting. So as for from 2017 and December 2015 and last year the chemistry. Scope. Now let's see financial accounting first. So you first see there are branches. There are 3 branches. Right? The accounts are classified 3 parts. First will be financial, management and personal. So financial accounting, all the financial matter can be recorded. Then management accounting, all the managerial things to taking the decision, all the managerial things can be taken in management accounting. And cost accounting, so they can take into consideration to a certain the cost of the product. Like 3 branches. It is cost accounting, management accounting, and financial accounting. In that first we see financial accounting. It includes the financial accounting recording, classifying and summarizing in a significant ways in terms of money or all transaction or event which are the financial character. Financial statements certain enough information that is used to the management by taking the decision. So all the financial record can be recorded in financial accounting. And this can be very useful to the management to take the decision whether to continue that product or discontinue product, whether to make production or discontinue production. So it is very useful to the management. There are 3 levels of management. There is top level and lower level. Right? So it is very useful to management to take the decision here. So management accounting is contained only the tools and techniques, and it gets the data on interpretation analysis mainly from the financial accounting. Thus without the efficient financial accounting system, management accounting cannot be complete. So there must be efficient managerial system in management accounting. So if we follow the systematic managerial accounting system, then it will be helps to the management to take the decision for them. The next will be cost accounting. Scope 5 ideas. Next will be second cost accounting. Cost accounting forms the important branch of accounting. It is the method of ascertaining the cost of jobs, operations, various process products, and it includes standard costing, marginal costing. So these are the costing. So the tools of cost. There are what you can say them methods of costing. In methods of costing, there will be marginal costing, process costing, standard costing. So all these are can be included. So it can be ascertained to the cost. This is called cost. Okay. And budgeting and forecasting. Budgetary control and the advanced view forecasting are the integral part of the management. So for each and everything, it requires the budget. Correct? And budget can be taken into consideration with the forecast. What will be the probable thing that will be happens? So you have to forecast for this thing. So forecasting are the integral part of management accounting. It involves the preparation of budget to measures of the actual results against the budgetary performance. And that's why there are so many budgets: production budget, cost budget, cash budget, flexible budget. So many types of budgets are there. Okay. So from this they can prepare. Then fourth scope for that will be the cost control. That is cost control procedures. So here it includes the inventory control, cost control, time control, budgetary control, and various other analysis also that can be considered in cost control procedure. Then cost and statistics. Provision for statistical and analytical services serves to the various department, and it can help to the various enterprises to making the cost and making the statistical data. Next will be reporting. Interim reporting is made to the top management, and the external reporting is useful for the outsider parties. So that's why they prepare, that is prepared and presented. They prepare the report and presented the report to the top management, and top management can take the decision according to their reports. So for this, they are given to you. Then another part is the taxation scope of the management accounting, the taxation here. So what is tax? Tax means tax on income is not tax. Taxation. What is tax? Tax on income is not tax. So for this, the computation of income in accordance with the income tax laws and regulation, preparing the returns and statement by making the tax provision and payment to tax accounting is the important aspect of management accounting, because each and every business has a pay tax to the government, correct? They have to pay the tax to the government, and to ascertaining the tax, that is the tax on income. So this is the useful of the management. Then interpretation. Interpretation means making comparison and give the interpretation ideas. So for this, it is closely related to the interpretation of financial data to the management to enable them and to make the important decision. So making the interpretation, making the comparison, and making comparison, which is feasible, which is profitable, which is well appreciated, taken into consideration at that time. They will take the decision here. So it helps to take the decision to the top management here. And lastly, number 9 is given to you office services. So office services are maintained by data processing, duplication, communication, providing stationery and printing and the other things also. So these are the office services that can be made. And for this, it is a scope given in 9 points. So that they asked you explain any 5 types of scope of any yes, how to write these things. So per point you don't write these things. You write point and start with the lines in paragraph lines. Okay, 5 points. So for 5 marks, at least 5 points is required. Okay, so 9, 10 points is close to 10 points in books. So out of that, 10. So which are the lines for you that will be for writing the explanation. Now we'll see. Define management accounting, December 2017, asked for 5 marks. All questions are asked with the information. Now let's see. Define management accounting. So there are certain definitions, and this asked there, which are like define management accounting, explain the features of the features, characteristics. Okay, so first we'll see the definitions. In your book, they are given here about 2 pages definitions, long definitions, but memorize only by definitions. 2 definitions defined. If they are given define management accounting, explain its features, 5 marks. So write 2 definition and features, 5 features. So many more features are in the books. Here about 9 in numbers still. Right? Then we see that first. Anthony and Hickman. Anthony Hickman has defined the management accounting in his own words. The definition don't use your words because it is definitions. Right? So for definition, you have to use the own words here. Now just see. Anthony and Hickman defines management accounting as the use of accounting figures in recognition or solution of the management problem, particularly those problems concerned with operations. So this definition has been given by Anthony and Hickman. This is going on also from the books also. In the words of Robert M. Anthony, it is a very simple definition. So management accounting is concerned with accounting information that is useful to the management. So simplification. Right? Simplification. What is this? That is Robert and Anthony has defined the management accounting is concerned with accounting information on that it is useful to the management. It is the accounting information that is useful to the management. Robert Anthony's definition is simple. Third definition we see that is according to the authority of T.G. Rose. T.G. Rose has defined the management accounting, not just the management accounting. Management accounting is adoption and analysis of accounting information, and it is diagnosis and explanation in such a way as to assist the management. So this is G, that is T.G. Rose definition. So three definition or three right in the examination. This both definition, it is Robert and Anthony definitions. One by that and write the examination. Management accounting is concerned with accounting information that is useful to the management. This definition. Now let's see the features of management accounting. What we have. Every time they ask this question. So just see, you can see the one particular topic. In that topic, what is the probable things? So they will give to the definition, the feature, the advantages, the limitation, some disadvantages. So substance that they scope like that they give you. Correct? In OC also you can see the principle of management. There are characteristics, features, scopes are there. Right? So as per that we have to write the examinations. Okay. Now we see here the features or characteristics of management accounting. So they are given 9 and 10. The first and foremost will be that is vital source of data. Vital source of data means important source of data. So their management account is serves as a vital source of data to the management or planning. So it is very important data to the management to making planning as well as taking the decision. This is the first characteristic. Second characteristic or feature will be functions of management. So functions of management are planning, organizing, coordinating, motivating, controlling. These are the functions of management which is already up to the syllabus for right? Functions of management. So the functions will be planning, organizing, directing, controlling, and motivating. So these are the functions of management. Accounting helps the performance of each of these functions in the meaningfully way. So that's why these functions that can be in the management. That is planning, organizing, directing, controlling, and motivating. So these are the functions. Third, useful to the management. Management accounting is useful to management. Management accounting is concerned with the accounting information which is useful to management. Then next number, knowledge and skill. Knowledge and skill. It is application, professional knowledge and skill in the preparation of accounting information in such a way as to assist management in management information of the policies in planning and control. So knowledge and skill means management accounting gives you knowledge as well as skill which can help you to using the management functions or accounting functions that is planning, coordinating, motivating, directing, controlling, and decision making like that. Then appropriate technique. So management accounting is applicable to appropriate technique and concept of processing historical and projected economic data. Historical as well as historical technical. And they are given to historical and projected economic data. Projected with the future forecasting. That means last and next, previous and the next subsequent. For this, it can use the appropriate technique. Then accounting method. So it comprises accounting method system which compared with the spatial knowledge and spatial activities method. Then accounting information. Management accounting is the presentation of accounting information, creation of policies, and day-to-day operations. Policies can be used in the accounting information. Then concerned with future. It is concerned with future. Is the eighth number future diagnosis to you. It is collect the analysis of data which helps in planning for futures. It is the analysis of data which helps you to make planning for futures. So for this diagnosis to you, planning is looking ahead and controlling is looking back. Right? Means to go anywhere, you have to make plans. Suppose you go on a tour to Mumbai, say for 4 days. For that, you have to go and make the plan. How much money you apply? How will you go? Which types of mode you have to like this? So you have to make the plan. So planning is looking ahead and controlling is looking back like this. So this that you are taking. Then interpret data. Interpret data. It is more concerned with records and the past achievement. Records and the past achievement. So these are the features. Now, one more question we can ask you. I told you there are three branches. One is financial account, cost account, and the management account. They will ask you distinguish between these two. So there will be compulsory management because it is a management. So distinguish between or give the difference between management accounting and cost accounting. Difference between management accounting and finance accounting. So we can ask for them. I ask and using the special. So while writing the distinction point, so you have to make one of distinction. Then first in management accounting and how it's the cost difference. But I think one point draw the line. Second point draw the line. Right. So first point number one, primary objectives are primary. Management accounting and first cost. So management accounting aims at the presentation of cost data to the extent of required with the relevant data useful to the management to take decision. So this is the primary objective. What is the primary objectives of the management accounting? So management accounting aims at presentation of cost data, interpret and required with the relevant data and useful to the management to taking the decision. So this is the main or primary objective of management accounting. What are the main objectives of cost accounting? The cost accounting aims at ascertainment of cost. It can be its aims is its main objective, its main motto for the cost accounting is to ascertaining the cost of goods and services and ascertainment of cost the main objective for the cost accounting. Second, use of reports. So it is given many more points. Long discussion but use this reports. You easily cover the notes and easily get the marks. This is a question which you get out of a class. For each and every question to go in, at least 5 marks, 5 points to cover. Then you will get each and every marks. Now we'll see. Another will be use of report. That report is very useful for this diagram. Management reports are useful to the management, but not both internal and external. So the management report are useful to the management only, not for the internal and external. Not internal and external. It is useful only to the management of the management. Whereas cost reports are made by management, they are useful even to the external parties also. Useful for external parties. Management as well as external parties. Then third note, nature. Management accounting is mainly concerned with future plans and policies. Management accounting is mainly concerned with future plans and policies, whereas cost account is concerned without with not only the historical but also for the present as well as forecast or future. Means it will be last, present, and future also. Where in cost accounting, whereas in management accounting, manually concerned with future plans and policies. Next, what will be happen for the future? What is the forecast for this thing? So they can consider that here. Whereas cost accounting concerned with the previous, the present, and future also. All policies have been considered. Then they are given to you statutory verification. Statutory verification. So they are given to you management are not the subject matter to statutory audit. In management, there will not be any statutory audit. It's not there in management. Whereas in cost account, in many cases, are subject to the statutory audit. In many cases, they can use subject to the audit there. The next will be scope. Impact on effects of the cost. So it is very important for the effects of the cost here. Whereas concerned with the ascertainment, allocation, and distribution of the cost among the units. Then information. Information will be quantitative and qualitative information there in management accounting, whereas here only quantitative information is there in cost accounting. Means quantity, how much cost for the 100 quantity, how much cost for the 10 quantities, means only quantitative things will be considered in cost accounting, whereas in management, quantitative as well as qualitative, both they can, both aspects can be considered there. Then now we'll see that here the objectives. Providing information to the manager to set goals and forecast of strategies. Whereas ascertainment of cost of production is the main objective there. Then recording. So it gives more trace on the analysis of future protection. Means they can give the more trace, more focus, more determination for the future. Whereas records past and present. Records will be past and present also. Then specific procedure law. So no specific procedure there in management accounting, whereas in cost accounting, specific procedures are there. In that we can use so many modes or so many methods, process costing, standard costing, marginal costing, budgetary control, all the things, all the processes, all the process that can be followed in cost accounting. Then planning, things. So planning. They are going to be short range and long range planning is made in management accounting, whereas short range of planning is made in cost accounting. Only short range. Then interdependencies cannot be installed without any cost accounting. It cannot be installed without cost. Whereas can be installed without management accounting. Means in costing management is not required. Whereas in management, without cost, they cannot make decisions. So they involve interpretation and interdependence. So like this, they can find. Let's see one more question they can ask. Maybe these are one of the key questions. This management as well as distinguish between management accounting and financial accounting. Next will be distinction between management accounting and management accounting and financial. आता काय करायचं आपण मॅनेजमेंट आणि कॉस्ट बघितलं आता मॅनेजमेंट आणि फायनान्शियल अकाउंटिंग बघायचं distinguish or distinction. Now in that first will be aims. So first will have the points of distinction, management accounting and the financial accounting. So down the line. And we are making the explanation. So see here. Aims. So aims to analysis and interpret accounting information. So aims to analyze and interpretation of accounting information. The next will be aims to record and report accounting information. What is the aims of the management accounting? Analysis and interpretation of accounts, accounting system in management. Whereas in financial account, aims to record and interpret all the accounting information. And the intention is record all the information in financial accounting, all the information regarding the payments. We can record them. Then next is format. Different format of report is needed. Wherein management accounting, they are given to you different format of report is needed. Whereas uniform form of final accounts, there is a uniformity. Whereas where in financial, in uniformity recording, we can use the final account. Getting account problem was uniformity. Whereas here in management accounting, so many things are there. Common size balance sheet is there. Then common size income statement is there. Comparative balance sheet, comparative income statement, trend analysis, then fund flows ratio, cash flows ratio. So many things, so many good things are there included here. For that thing means different format of report is needed in management accounting, whereas uniform format of annual accounting can be used in the financial accounting. Nature, both monetary and non-monetary information. What is non-monetary? Monetary means this is a transaction in that money involvement. Money involvement is called a monetary transaction. Non-monetary transaction means that transaction money is not involved. It is based on the credit projects. So monetary as well as non-monetary transaction can be involved in the management accounting. Both monetary and non-monetary information is there in the uh, management accounting, whereas information of the monetary nature can be taken into consideration. Only monetary nature. If there is finance, if there is money, so that money matter is there, can be recorded in financial accounting only. The next reports equals to you, reports to the internal management. So they can report will be to the internal report to the top management like that. Whereas reports to the outsiders, they give the reports to the outsiders to know how much profit is earning there, what is their asset, what is their balance, how much profit are there, and what are their current ratio, equity ratio, other debt ratio, other ratios are there. So it can be give the information to the outsiders. Outsiders, they will give the information. The importance, relevance is more important. Relevance is more important in management accounting. Relevance means the true and fair things is very important. What you have begun, the reliable things is there. The very reliable things is very important. Okay. Whereas the advanced you accuracy is more important. In financial account, accuracy is more important because each and every matter we can analyze. It is analysis, then we can see it is accurate. Accuracy is more important in financial account. Whereas in management accounting, relevance is more important. Relevance. Then next will be audit. Report neither audited nor published. In management account, they are not audit the report, not publish the report. Whereas they are given reports audited and it must be published. Because there are internal check that external check is there in finance accounting, right? So time to time they can do audit checking and prepare a report things like that. Then publications, that is compulsory, voluntary and optional. So just here voluntary and optional. Compulsory means management is voluntary or optional. There is a compulsory under the law. Means there is a Companies Act 2013. So many acts have been changed now. So it must be compulsory made. Then period or report. Reports provided as and when needed. When management accounting, reports provided as and when needed. If management asks you, give the report, they'll take the report, read the report, study the report, and take decision whether to continue or discontinue. Whereas other cases, they are given to you yearly reports. They can prepare yearly at the end of the accounting period. They can prepare the reports. They can prepare the financial statement by means of trading account, profit loss account, and the balance sheet. And other parts are there. That is called the tools of the management. Cash flow, control, registration analysis. All these are there using them. Then another will be report based on. Report is based on management need and the purpose. So reports must be there. It is need for the management purposes, whereas reports should be based on GAAP. That is GAAP, when General Accounting Acceptability Process. GAAP, GAAP of there. Report should be based on General Accepting Accounting Process. That can be followed here. Then accuracy. Relevance is more important and accuracy is more important in the account. So these are the distinction point. So like that, finishing your scope and like that. Now, after that, we'll see here difference between cash flow and flows. So, what is the meaning of cash flows and fund flows? So, fund flows mean in that fund flows, how many funds are available, and what are the application of fund, what are the uses of fund. And cash flow means it gives the exact correct place and correct idea of the cash flow. So in that cash flow, there are three types of activities. What is that three types of activities? In cash flow, operating activities, financing activities, and investing activities are there. And each and every activity is containing inflows or inflows or inflows. Correct? So for that, they can ask this question here asks. Remember the question paper, you can distinguish between fund flows and cash flows. And here in this connection, they can ask you, give the format of changes in working capital. Changes in working capital. How that format of changes in working capital made, I'll give later on in the next period. So I'll bring this notes to the next period. Now we'll see the distinguish point between fund flow statement and cash flow statement. Meaning first. The term funds refer to the working capital and it shows the change in the position of capital. So it refers to the fund. Fund flows refers to fund and it can show the changes in working capital. Changes in working capital statement, increase in working capital, decrease in working capital. Changes can be made in fund flow statement. Whereas in cash flow statement, this is the term refer to the cash only and it shows changes in cash position. So in that it can show how much cash is in flows, how much cash is coming, and how much cash is outflows, and how much cash is going, how you have to apply this cash. And that's why there are activities will be three. Operating activities means by making operation, cash incoming, cash outgoing. Then by making investing activities, investing cash outgoing, cash coming. For example, you purchase investing activities means you purchase a land at that time, purchase of machinery. What will be there? Cash will be outflows. If you sell a land, right? Sell a land, sell a machinery, then you will get cash incoming, cash inflows. So like that. And another will be financing activity. Financing means how finance is incoming and how finance is outgoing. What is the financing activity? So outflows of the financing activity will be issue of sales, issue of debenture, loan payment from bank. So to that extent, cash is coming. How cash is outgoing? That is outflows of cash. So redemption of debenture, repayment of sales, repayment of equity sales, repayment of debentures. Correct? So by making all payment cash. So activities can be following here: operating, investing, financing. So in that cash flows. So easy. Useful, not just useful. Analysis is more useful for long-term planning. So fund flows is very, very useful for long planning. So this is more useful for short planning. Cash flows immediately for the short period. Cash flow is important. Nowadays, that fund flows is removed from the stats, but they keep it on levels. Nowadays, they can include that cash flow in your syllabus. It is also their cash flow analysis of financial statement for 12th standard is there. Correct. So it is asked for question number 5 option comparative statement, common size statement, comparative income statement, common size, or comparative balance sheet like that, ratios, and then cash flows. So it is option for the what is option for debt, correct? Like that you can see here it states. Now it indicates. So fund flow indicates inflows of funds and outflows of funds. In funds, we can see that application of fund and sources of fund. What are the source of fund? In what source fund is coming and what source fund is outgoing? How the source is coming? How serving? Once again, issue of sales, issue of the major source is coming. It's a source fund. And what is applied means payment of debenture, payment of income tax, payment of dividend, correct? Payment to bills payable, payment stores. So to that extent, it is going out there. So here, fund flow statement is then includes it. I goes to you. Fund flow statement is a vast concept which includes flow of cash also. Whereas as compared to fund flow statement, cash flow statement is narrow concept which includes only cash inflows and cash outflows. Cash inflows and cash outflows. I mean, it is a narrow scope, whereas fund flow is a broader. We both include fund flows as well as cash flows. So both things have been included. Then effective. So this is the test of effective useful in working capital by the management in a particular period of time. So that is fund flow is useful to useful for effective of working capital. So in fund flows they can certain working capital. Whereas this is the test of effective cash flow by the management in a particular period of time. So that is called a particular time how the cash inflows and outflows is going on. Then changes. This consider change in all current assets and current liabilities, whereas it indicates simply cash receipts and cash payment. Cash receipts and cash payment. So for this, take into consideration the other current assets also there. Then improvement. So improvement in working capital does not mean the improvement in cash. If you increase the working capital, it does not mean that cash is increased. Improve it. Whereas cash is one of the constituting working capital, and as improved in cash position, the result will be in cash budget. Cash is improved, increase, it can affect in cash budget there. So these are the various distinguishing point 8 in number. So this will be finishing the battle. Now this will be in where साला गले सब पुणे सब okay meaning and definition of management accounting, financial accounting, cost accounting. Okay, then we'll take there the working capital, concept of working capital, components of working capital. This part we have to take into consideration. एवढं घेतलेलं आहे बाकीचे हे सगळं मी काय करतो तुम्ही नोट्स घेता मोबाईलवर घेता आणि अनालिसिस ऑफ फायनान्शियल स्टेटमेंट करतो आणि मग पार्ट मॅनेजमेंट दुसरा भाग आहे माझं फर्स्ट सगळे पण टाका आणि त्यात आम्ही काय शब्द देतो सगळं म्हणजे तुमच्या वर्षात पूर्ण पेपरच आहे आणि इकडे दोन दुसऱ्या पार्टचे ते पुढे घेतल्यानंतर त्याला सांगा बंद त्याला जायचं आहे जायचं